something. I usually don't use multipliers. In my execute, what I call the trigger, I always want to use them. But in this type of models, if I'm not using time filters or news filters or blah blah blah, sometimes the margin will be drastically increased or decreased. So as you can see here, we have the 3%, 3.6%. We have an apps of 821, so it means in reality EA is making money before the max drawdown hits for the 3.7k. So in reality, your exposure of your initial deposit in this model is, or in this range, that's pretty much what I mean in this range, is that like 3.6%. So the idea would be to have something better, something that increases the profit but reduces the risk, or at least increases the profit but we keep the risk at 3.6, let's say, and we at least get 7.5k net profit. That would be better. What we do next, then we check the overfitting. We go to the max stress scenario, that in this case will be 2011-2012. We know that we have a 71% drawdown. In this case, for example, I'm fine with the net profit. As you can see here, is the same scenario. The apps drawdown is lower than the recorded max, 56%, and the max drawdown is also registering lower than the absolute drawdown. I'll explain also in further videos how these three numbers work and why we follow each. I usually work with the 71 in this case because it's the max recorded even with profit, so we go for that. And in other models we can go lower because for max stress scenarios sometimes it's only, for example, that model that I was testing was in this range only, getting the I hate trading. I hate it, but I love it also. I'm not gonna deny that. So the idea is that, for example, if you avoid trading July 8th and 9th, for example, you suddenly said, I'm not gonna trade this week. So you start July 10th. June 10th. So you have already, this starts in 91 or 90, 91, sorry, 92 actually. That's when my EA places the last order. That's the last order I can claim. So if I avoid trading those days, and I start in the day 10 or the 10. Let's see. At least at the open, we could say it's 2.5. Yeah, we could say safely with spreads will be at $2.5 move that we're saving. Like it will be now, our EA will be entering, we could say, in this candle. So it's a huge difference between 92 and here. Let's mark it as red. So that's the difference that can make only not trading one day, and that's a risk mitigation that you are doing manually but not trading, and it can happen a lot of days. For example, that can be a Sunday, so you're not gonna trade a Sunday every time, you know. With this model in particular, you're expecting to trade 24/7. That's why I'm building it. That's why we take the max drawdown to let the EA at least manage the money efficiently as much as possible, so we don't have to intervene a lot as passive income, 100% automatic. But also we have more risk mitigations that also we will work with them in future videos, so you can apply them also with B2 or B1 it's not necessary, but with B2 can be applied very efficiently. And in even the worst case scenario with the B2 version, those particular scenarios are very hard to clean. Doesn't matter the version. If you are taking losses, I don't like to take losses. I don't use like the stop loss. So if you like to take the loss, I had a user working with the B2 that was taking losses in some periods or in some levels, and using the recovery factor to trade the next like worst case scenario. Again, it's only 1 or 2 in years. So once you are stuck, the beauty of catching is once you're stuck in this move, look the dramatic spike, and if you're using two separate models, one for buy and one for sell, once price goes down, you're cleaning your first drawdown, the one that was holding sells when price was moving up. This is the move that is cleaning that drawdown, but also your buy model will enter in drawdown in this move. But you know, this move is because at least this one in 2020 they announced the COVID vaccine, the first one. So you know, recovery is coming. That's very good news. Market reacts, you know. And after that, as you can see, it was a more moderate or more, we could say, clean recovery until we bottom or we bought in 2021. And for now, we're struggling. We had a 2022 spike, the recovery, and now we're way beyond these points. So the idea is that you will be making money, doesn't matter the movement, so we don't have to really chase or worry about a 70% drawdown. That's only one case scenario, but the strength of the model is that even if you see the trend going up, like I don't mind giving the 100% of the margin to my model. I use the 80%, 90%. I run also with 100% my account sometimes. What I mean by that is I stress test this 71. I make at least 85%, so I can count that 15% plus the profits. Doesn't matter if I not always compound at the exact same time, so I can use profits also as risk mitigations. So not every time you're gonna get the 71%. And I top it to 85% in case that 50% gives me more room plus the profits to get more margin in case something new happens. I need to be prepared, but of course that's just one mitigation, very linear. I have more efficient ways to not take the 70% or the 80%. The idea is you can decide, for example, I as mentioned, like to get the 85% in my worst case scenario, and my margin will work at 85% in worst case scenarios data gives us. But you can say, for example, I like it 30, so you will reduce your profit in exchange of lower risk. So that's what people need to understand. This is a serious model. Like we're trading like real retail traders can. Like as much as possible, we're leveraging our tools, our margin, our leverage, everything possible to stay in the game and make money long and short term, but especially long term, because short term talk, trust me, like it's not worth like. That's why I stopped selling the EA, because people chasing short term profits or people that ask me how much it can make in a month, I don't want to sell them, because they need to first understand they need to work with the risk. They need to understand that you cannot chase profits if you're not ready. Like trading and investing are two different skills, and this is an investing model. This is something that everyone can use and can rely, because we're using data and current live data, not only past, to stress test and train the model with what we have. And we can also use further mitigations or actions to keep the money protected. But for now, as retails, this is as good as we can get it, because even the 90% quality, we don't care. We don't need more, because as you can see, we're only using grid and multipliers and multiple logic, stop loss, hard stop loss. I don't use any indicator. I'm not using any news filter, time filter. Like the execution will be the same every time price moves. If price it's not moving, the orders will stay the same. Like EA will do the exact same thing if price moves. And what's the beauty of these markets? Price can only move up or down, so it will move, and EA will do the exact same thing, and we can know for a fact. In advance, we know two things. As a counter trending model, we can reverse trade it. Of course, the EA can be reverse traded. You have a let me show you in this case, this model in the worst case scenario is giving you 90% profit. Of course, buy model is sweeter. Let me show you the sell model. This is the one that, I need to download the ticks for this one. Okay, I updated the terminal, I'm not connected, so MetaTrader issues. But let's go with this one. So the sell reduces the win rate, because I need to close faster, because as you can see, it's more likely that I'm gonna get stuck in sales that invites, you know, because really price, you don't expect it to be very low. Let's go with the daily. Really, if you see price over time of gold, it's going up. So it's breaking all-time highs every time something major is happening. So really with gold, I'm trusting more the money on the upside than on the downside. So with the sell model, I'm chasing more the exits. Every retracement, I see it as an opportunity to either close the whole basket of trades or percentages of my margin. So I add profit to the balance, and also I liberate or exhaust margin. So I have margin to position myself further in better positions. So in case, for example, market make this move but here, well, I'm ready to sell. I already positioned here to take the move, but in this case price didn't do that, so I need to be also able to manage the whole trend. So at the moment, for example, here we have a $21 move after a $43 for $30 move total trend, the red one, and we have this little retracement when we have moves to the downside, very abrupt, and this move was more than 50%. So the idea is to chase every possible move. But we could say efficiently that model will trade every range, especially this model won't make a lot of money during rangy periods with very few pips, but because really we're waiting for bigger moves, or at least $30 moves to average 60. And in those ranges where price is not moving, we need to have more skill to enter and exit the markets, because I don't have a model that... First, this model needs to be clean without bank filters and everything, because we need to know how EA acts in the worst case scenario also. Because if you are not adding any filters, means that's as pure as your trading can get, you know, on price action. So once you add these filters and time filters, risk management, blah blah blah, those corrupt the execution. That's not something I call it standardized. That's not something that will happen every time. So then the samples are different. This is a sample. The one that I'm offering is the sample of a model that will do the exact same thing in any circumstances. The only issue will be price never retraces, but when price has never retraced, well, so far per the data that I'm testing and my live trading accounts, well, price always retraces. I ended up with... It's very impressive because after 133 weeks, it was more or less 2 years, we could say 2 complete years, and 12.73 sample of trades. We have an 88% win rate, so and a recovery factor of 6.25, even though I'm not taking a lot of losses. If you check my statements that are uploaded for everyone to check them, I never lost a month. Like, I never closed negative any month. I of course had drawdown, but I never closed a negative month. As you can see, my curve is very clean, and I was also compounding, so that's also a reason why drawdown increased and profit, but a stable... I mean, if you're not compounding, is because you don't trust your model, but not every moment when you make profit you have to compound. So really, it's a matter of how you manage your accounts. But this was very clean at the end. Even counter trending tells me that I was on trend a lot of the time. So 88% win rate with this sample in a lot of time cannot be faked. So you can check the statements. A lot of trades, I don't go back. I use the tester, but you can check them. And let me continue with the trials.